Hi, my name is Christian Harris and welcome to this week's video blog at MonsterMortgage.ca. We're at the end of June and we're speaking about the most recent rule changes that Flaherty introduced last week. This was the fourth set of rule changes he has made in the last 4 years to tighten up lending for the banks and the other lenders. 4 changes he really instituted, and one of them was homes in Toronto, $1 million homes and above can no longer be insured by CMHC. It's not a huge segment of the market by any means. However, anyone looking to buy a home for $1 million would now go from having a little down payment as $50,000, 5%. They now have to have $200,000. Second and third are really, they go hand in hand as far as what people are going to qualify for. What the government has done is they've reduced what's called the lending guidelines or lending ratios. So in our industry it's called TDS, total debt service, and typically you're allowed 44% of your gross income to cover mortgage, your property taxes, and other debts like car loans, student loans. That 44% has been reduced to 39%. So that is going to make people qualify for less of a home. Because, again, they can only use 39% of their gross income versus 44%. On top of that, they've reduced the amortization from 30 years to 25 years. So this in effect increases your payment. It's roughly $50 for every $100,000. So if you had a $400,000 mortgage, your payment would now be $200 more. So those last two things, with the TDS reduction from 44 to 39 and the amortization being brought down from 30 to 25, means that the average person is going to qualify for less of a mortgage than they did last week, and they'll be paying more money on a monthly basis. The fourth category was refinancing. No longer will CMHC do any type of refinancing, and that has less of an impact, we find, because they already had that at 85% of the value of your house. So now they won't do any. The max you can refinance to is 80% of the value of your home. This has less of an impact because most people were not paying a CMHC premium just to pull out 5% equity in their home. So that's the fourth major change. The government's also having the lenders tighten up on their underwriting practice, their policies. So it will get tougher out there, but to put everything in perspective, all these changes with the ratios coming down and the amortization being reduced, it's probably the equivalent of rates going up 3/4 of a point to 1%. So if these rule changes didn't happen and the rates naturally went up to 4 1/4, which is not a bad interest rate, it would have the same net effect on most people. So that's the update as far as the rule changes. One thing we always stress is that this market has been ever changing for the last few years. It's very important that you're working with a mortgage professional who understands the market, understands what the lenders are looking for, what the new criteria is, and people looking to go buy a home who want to get pre-approved. It's very important that you sit down with a mortgage professional, a mortgage broker, and go through your numbers and understand exactly what the cost will be, what the products are out there, and especially with these new rule changes which come into effect July the 9th, so there's not much time, but make sure you pick up the phone or send us an email, and we'll hopefully be able to answer any questions you have, and you can come in and we can sit down and go through your detailed plan. Thank you very much.